Hello and welcome everyone to section 6 of the course, divided into two lectures. The first lecture explains the complete step-by-step trading plan for support and resistance trading strategy, whereas the second lecture aims at explaining a key mistake which you will look to avoid while using this strategy. With that being said, let us understand the complete 5-step trading plan, starting from the very beginning of the analysis to exiting a trading position in real time. Open a new price chart of any instrument and download price data starting from 4-hour time frame to monthly time frames. Guys, keep in mind that you can open as many charts of different trading instruments as you like. Once you've downloaded price data for one or many charts, make daily time frames as your default time frame. This means that every time you close a particular chart on your MetaTrader 4, you will do so while daily time frame of that chart is open. This will help you avoid having the same chart saved on different time frames in your trading platform. Plot key support and resistance levels starting from the monthly charts. Make sure that these levels are visible on all time frames up to 4 hours for your analysis. Please use weekly charts when there is little or no monthly price data available for any security. This is the best time to revisit the examples in section 3 of the course if you have difficulty labeling these levels on larger time frames. Convert key levels into support and resistance zones for recent and present price action. The third step is to plot support and resistance zones using key levels near the present price action. Once again, your learnings from section 3 of this course will prove beneficial while plotting these zones. Guys, I also advise to use different colors for these zones to keep your analysis clear. Add volume indicator at the bottom of your trading chart. In the following step, you will add the volume indicator at the bottom of your trading charts. Please assign different colors for high and low volume bars for your analysis. Refer to the second lecture in section 3 if you require assistance adding volumes to your trading chart. Take a trading position upon the combination of key, support or resistance level, a major candlestick pattern and high volumes during that candle. Before I discuss the trade entry and exit parameters, a key rule that you need to remember for all of the trade entries is that you will never enter while the candle is still running on 4-hour charts or daily charts. In fact, you will wait for a candle to close. This is because while the price is still moving within that candle, you have no conclusion about that period's volumes, neither the pattern of the candle. So guys, when entering a buy position, you will always initiate a buy entry above the high price of the candle, which is associated to price reversal or continuation, whereas your stop loss will be just below the low price of this candle or below the last price swing high. On the other hand, during a sell trade, you will take a sell entry just below the low price of the reversal or continuation pattern, whereas the stop loss will be just above the price high of the candle or above the recent price swing high. When it comes to deciding take profits on a live trade, you have 3 options to exit a trade. The first option is to close upon a strong reversal pattern with high volumes against the direction of your existing position. The second option is to wait for markets to advance to next key support or resistance levels and then exit your trading position. Or the third option is to close once you have acquired reasonable profits on a trade and decide not to carry that trade further. Guys, I'm confident that through this lecture and trading plan, you have gained the knowledge on how to combine the 3 technical indicators in this strategy. When it comes to risk management while using this strategy, I do not advise risking more than 2 to 4% of your trading capital on one single trade. Also, to increase the probability of long-term returns, please make a portfolio of your favorite forex pairs, metals, energies or stocks while using this strategy to trade in a professional manner. I personally carry 5 to 10 positions in a market at all times in my portfolio, and managing my risk correctly allows me to do so. So this concludes the lecture on complete trading plan of the support and resistance trading strategy, and I will see you in the next lecture. Hello everyone to the second lecture in section 6, where I quickly want to go through a key error that support and resistance traders make while trading a breakout after a consolidation phase. It is very simple to understand, but it carries a significant importance in support and resistance tradings during a sideways price activity. Therefore guys, you will never buy at support when market is making lower highs in a consolidation phase. This means that the sellers are entering in large numbers as the market fails to reach the horizontal resistance zone that you plot once the first leg of the sideways price activity defines boundaries for initial support and resistance zone. Therefore, what you see here is repeated tests of the horizontal support as price makes lower highs. This price activity is associated to selling strength entering in the market, hence giving an indication that price is highly likely to break out from this support zone and decline further. So when you see price making lower highs in a consolidation phase, then you should plot a diagonal support to look for trade entries. Now we will study this guideline using examples. Here we're looking at 4-hour chart of gold. After a downtrend, price entered a consolidation phase on gold. Then, after first two legs of the sideways price movement, the support and resistance zones are plotted on this chart. Now to study the guideline which says to avoid buying when price makes lower highs, notice how price fails to reach the resistance zone as it posts the first lower high. I will use a trend line to draw a diagonal resistance here. Moving on, gold posted another lower high after price bounced from the support. Hence, I will extend the diagonal resistance to the right on this chart. Guys, this diagonal resistance is signaling the control of sellers as buyers fail to push prices higher on gold. And all the price touches on this diagonal resistance presented small sell opportunities before price breakout to continue the bearish trend. This is all that this guideline is about. Now let us study one more example on daily charts as well. Here we're looking at US dollar and Canadian dollar chart. Once again, we are studying the same guideline. Here we are able to plot our support and resistance zones once the first leg of sideways price movement ended. Once again, notice the lower highs in this price range signaling the selling strength. Once again, I will use a trend line to draw diagonal resistance on this pair. And once the price breakout was recorded during this strong bearish candle, a sharp downtrend continued on this forex pair. So this is all you need to know when market makes lower highs within a consolidation phase. And let us continue studying when the opposite scenario occurs. Similarly, when the market makes higher lows in the consolidation phase, it signifies the buying strength in the market, as sellers fail to push the price lower. In this case, you will avoid selling at the resistance zone as it is highly unlikely that the price will break out through the resistance zone in the later phases of sideways price activity. Now let us study a final example to understand the guideline. Here we're looking at Euro Canadian dollar to study this guideline. Price went into a consolidation phase from here, and we are able to see the support and resistance zones after this bearish candle. Now notice the higher lows starting from here, and finally a sharp upward trend was recorded on this forex pair. I will quickly draw a diagonal support to explain the buying strength associated to each higher low. Guys, the guidelines you've studied here more often than not signal what is about to happen in the near future. So please study the price action carefully. This also concludes this lecture and section 6 of the course, and I will see you in section 7 where I explain very recent or present live trades that I took using this strategy with complete trade management.